Hey everyone, Liz here from BG Trading. Hope you are well. Today is October 19th, 2022, and I'll be analyzing ZIP, which the SX code is ZIP. Is it a good buying opportunity for ZIP, or is ZIP trading in the buying area? We're gonna have a look at this in this video. Just want to remind you, this is not a financial advice. It is just BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we apply our strategies to make our decisions on trade together with our VIP members. If you like, please subscribe or share this video with someone. Also, I'd like to invite you our Instagram account, BG Trading AU, and to become a part of free Facebook community, Buy, Grow, Sell Strategy for Share Traders. We post a lot of great quality content, including stock analysis, videos, and all educational input for stock traders, especially for those who don't have much experience. So can avoid making the silly mistakes that we have done when we started. Now let's go straight to the chart formation for ZIP and why I'm interested on this stock now. About 3 weeks ago, I've done this video while we choosing SAYONA over ZIP at the time. But now things have changed a little bit, as the time that we done the other video, SAYONA was trading around 55 cents and ZIP was trading about 90 cents. But now ZIP's trading about 60 cents, 65 cents, which brings us to look very, very closely the fact that ZIP is the leading buy now, pay later in the market, and is close to its low back in July 2022. The trend has changed here as we see this bullish intersection, and then obviously it continues. But at the moment, we're still under this change of formation, which means we still haven't actually tried a new lows after this lows in June. We're still trading above this support level here, which is very positive for those stocks. Potentially proving that companies like ZIP and SAYONA have been actually oversold at the time, and it is still oversold, offering a good opportunity to look into and maybe even buy at the current levels. The major problem for ZIP, for example, is those candles down here. If you go to revenue versus net profit, we see that revenue increases, but net profit sort of way out surpasses the increase of revenue, and obviously showing investors that the company is in a very unsustainable or dangerous position. Most of these was generated because ZIP was acquiring a lot buy now, pay later companies in different markets, trying to expand aggressively or at the cost of its shareholders. And ultimately, the management has realized that most of the shareholders were very pissed and they start dumping the stock. Not to mention short trades of on the stock. So what I wanted to say here is that the management finally realizes that expanding aggressively is not healthy for the company. Honestly, I think they made a mistake, and they're now closing and then reducing drastically the cost, the operational cost, in order to bring back profitability, or actually not bringing back, but actually bringing profitability into the business, which is exactly what investors wanted to look into. But for us, ZIP is a great trading stock, not investment stock. And every time this sort of formation here happens, we want to be positioned ourselves into the stock. So what I'm looking here is these last two green candles on the Hekenach. Those last two green candles, if tomorrow or next few days, we have a confirmation of this bullish intersection level 2 here cross as we had here, and then the candles trading on the upside of the yellow line, which is our EMA 9, then definitely it will be a hold. At the moment, we look into buying the stock at the current levels and hoping for those candles start sort of surpassing, and then ultimately we have in this intersection here of the yellow line on the red line, confirming that this lower will be nothing else than a higher lower. Then I will see a lot of investors coming back into this stock. The key macroeconomic fact for this rally to happen is to see what's going to happen with the inflation in the US. The next CPI will be critical, and ideally we wanted that CPI to be in line with the or lower, which is October CPI, in line or lower to September, and then therefore suggesting that the Fed will break into increasing interest rates as inflation contains. If recession hits, I think that will be definitely positive for buy now, pay later in a lot of growth stocks, because when recession hits and inflation is out of the way, which means less money in the market, people will be forced to use credit cards and buy now, pay later services. And then we might even see interest rates cut along the way in the next 12 months or even 24 months. If that happens, if you have indication of that, most likely we'll see a pretty good rally. And in stocks like this, rally can be previous rally proving that 100 to 200% rally, it's very, very easy to happen. And if we have a 200% rally, it's just going to bring the share price back to where it really should be, provided that the company start breaking even in the next couple of years, which is around $2.20. Okay, I'm not suggesting that we should buy the stock now to be to wait for $2.20, but what I'm looking here is if I'm buying the stock now, I would be chasing $1 mark, which brings a 50% profit from today's quotation. Pretty much 50%, and making 50% in ZIP, I will be pretty happy already, provided that we've done other massive trades with ZIP. So this is my thoughts. I think ZIP at the current chart formation is a buy. Nevertheless, you need to be mindful. They need to act really quickly if this red candle starts to appear under the yellow line, and then to get out and wait for the next low, which could potentially happen at 46 or not. We never know what's going to happen. So this is my thoughts on ZIP. I think ZIP is a buying opportunity at the moment, but you need to be careful with those stocks. This is highly risky, is not suitable for conservative investors or traders. Let us know what you think, and I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand, and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.